Hello, everyone. Welcome back to Switch Markets Live. I'm Shane Vernier, and this is the week ahead. Today, we're going to really preview what to look for this week, but more along the lines of what we're thinking with regards to the scandal season that's breaking out in Washington, D.C., and what exactly is happening to our market, our interest rate expectations. I think that is the news of the day. We can certainly go through and look at our economic calendar. I would probably just hold off on that until the Switch Markets newsletter comes out tomorrow. We like to give you a great idea of the key events and the key markets to hit there. But what this stream is great for, it's great for game planning. We have an opportunity potentially to spot a few trades in real time, and that's sort of what we're going to focus on today. There is some big news, though. There's some big news out of Washington, D.C. There's actually two big stories, and we talked a lot about Jay Powell on Friday. We talked about exactly what could happen to the United States Federal Reserve and interest rate expectations if Jay Powell was to go down. Jay Powell's the chairman of the Federal Reserve, one of the most powerful people in the world, and right now the ice is crumbling beneath his feet. And we talked about it Friday. I don't necessarily like to sit around and go, told you this, told you that, told you this. We leave that for the talking heads on TV. What we try to do is spot things that are going to be important to our trading. And it will get no more important than the Federal Reserve Chairman being forced to step down. And I'm telling you what, right now the gears are turning. And it wouldn't shock me if Powell was out by the end of the week. It wouldn't shock me. This thing's starting to hit critical mass. And Jay's one of those people that says, hey, listen, I'm a rich man, and I'm going to go to work in the private sector. Do I need to stick around and deal with criminal referrals? Do I need to explain how this building, this Federal Reserve renovation, is $2.5 billion, $700 million over budget? This is the story of the week. This might be the story of the decade. So right now, I'm watching it closely. We've also got scandals breaking out all over the United States government right now. It's going to throw things into a bit of chaos, but for right this minute, we've got pretty true price action. We've got some markets on the move, and I think we got some opportunities. So this is sort of definitely a Q&A. If you guys have any questions at all, be sure to leave them in the live chat, and I will be sure to answer them as soon as I can. We have a few markets that we wanted to look at here that was listed by Ras Faraday a little bit earlier today. He wants to look at some Great Britain pound pairs and the Great Britain pound Aussie. I'm certainly going to do that. We're going to look at the Euro USD, also the XAU USD. You guys love spot gold. US 500 is on the move right now. We may have a chance to trade that 5813 EMA crossover strategy. And if, in fact, that does come across the board, we're going to go ahead and do that live for you. And then also Shiba Inu. Shiba Inu is on a roll. And also Bitcoin is on a roll. Ethereum's on a roll. So if you guys are into crypto, if you're into crypto, you're doing very well. Well done. So I want to welcome everybody. A big old welcome to Ali. Good to see you. T Marina. Happy Monday. Shane, can we check out the Euro, Japanese yen? Of course. Absolutely. Let me see. Resego, Small Yeezy, Fentham. Huh? Good to see you. Small Yeezy. Welcome. Any questions at all, any markets at all, just drop them in there. This is a great day to cover them. You guys know how I feel about Mondays. If you've never seen one of my live streams, Monday, I don't trade Mondays typically. I like to sit back. I like to wait. I like to see the daily ranges set up and then really go hard Tuesday, Wednesday, Thursday. Monday for me is about game planning and preparation. So today I'll answer any questions you have. I'll look at any markets you have, and I'll get you set and ready to trade. All right, so let's go ahead and look at a few of these markets. We do have a couple of requests right off the bat here. This one right here is a Euro USD. I wanted to start there. We had a real great trade idea last week. We're going to have one out a little bit later today as well. So if you don't get the trade ideas, head on over to howtotrade.com. Go ahead and register. Everything's free. Go ahead and register, and you can just click my picture and give me a follow over there, and you're going to get the trade ideas and market analysis sent directly to your email inbox every single day. And if you don't like email and checking it, I don't check mine really, rarely. But if you don't like email, then you can just go in there and check out our analysis thread, and you'll get the trade ideas. We've been hitting pretty well. We've been hitting pretty well over the last several months. That's about all I'm going to say about it. But this right here was really a fantastic trade, and we just missed our entry. But now you can definitely see the Euro USD is bullish, and that's one of those trades that it's one of those we almost had it. I mean, 38% is what we were looking at, 115.50-ish, somewhere in there. And you can see right here what's your low. Your low is what? 115.56. That's a close but no cigar, guys. So I'm going to go ahead. I'm going to chalk that up as a missed trade, and that's just sort of life, man. You get a lot of trades. You miss a lot of trades. You just got to stick with it and always be in the pocket, always be ready to go, and definitely always be ready to trade. That one, that just missed us. Was it a heartbreaker? For me, not necessarily. I was trading Euro FX futures, and this was compliments to the chef. This was one of the reasons why I love Fibonacci numbers. Went right up there. This is essentially the same thing as your Euro USD, but right there, bang, bang. Absolutely fantastic trade. Loved it. Bounced right off of 38%. and that's just how we draw it up. Let's see. Steve France, it's good to see you. Steve, welcome. Andrea Garwal, good to see you, Andrea. Always a pleasure. If you guys have any questions at all, be sure to drop them in the live chat or comments. Questions or comments, go right ahead. And we're going to just go around the horn. We're going to look at some markets. We're going to cover some key stories. And that's pretty much going to be a wrap for our Monday. I got a feeling that this is going to be a very good trading week. As far as the economic calendar goes, I'm not too blown away with what's happening. Probably the big event this week is going to be the ECB that's going to get involved here and really impact the euro coming on probably Thursday. During that overnight Wednesday session here in the United States, early Thursday Forex session. Definitely want to keep an eye on that. Dragon 131, good morning, Shane. Can we throw a fib on the Euro Japanese Yen 4-hour chart? All right, guys. Team Marina and Dragon, you guys both want to watch, or you both want to check out the Euro Japanese Yen? Absolutely. All right, let's go ahead and pull the chart. Lewis Shepard, good to see you, Lewis. Welcome. You guys have, like I said, any questions, comments, anything at all, fire away. I'm all ears. Feel pretty good today. I'm back in the saddle. I'm always a little bit, I won't say groggy after a weekend, but it's funny how fast things change when you get away from the markets just for 48 hours, and then you come back and you sit down. I mean, I've been doing this for so many years, and it feels like every Monday is just something new, and it is. This week's brand new. And remember, your best trades are always tomorrow. Trade for tomorrow. I know it's an old cliche. You hear everybody saying, hey, always trade for tomorrow, but really, your best trade's always tomorrow. I've been in situations where I've lost a bunch of money on a Monday, and Tuesday turns out to have the greatest trades ever, so I don't lose a lot of money on Mondays anymore. Decided I was going to make that change for my trading, and it's made all the difference. In any case, right here, you see this Euro Yen. Everybody's really looking at this. We'll get down to the lower time frames in just a second, but we do need to set up some macro levels. Right there, I would just, pullbacks, clearly pullbacks. You're on a 1, 2, 3, 4, 5, 6, 7, 8, 9-week winning streak. Sooner or later, you will get a washout beneath the previous week's low. Just quickly before we move on to some key levels that we can actually use for today, understand that a lot of traders, a lot of swing traders, and a lot of longer-term traders, even intraday traders on small time frames, they love symmetry. So you'll see a lot of traders saying, okay, we bought in down here. Okay, I'm going to move my stop loss to there. Now I'm going to move it to there. Now I'm going to move it to there. Right beneath these lows, I'm going to move it there, there. And the idea is that you're going to get in on a runner. I traded that way for a long time on like a 1-minute chart. And I can tell you that more times than not, you get stopped out and the market keeps going in your direction. However, on a weekly time frame, you have to pay special attention to last week's low. Last week's low is very important. It's a big-time key level. And the reason why is you've got a lot of money that's long in this market that hasn't been forced out. Remember, when the charts go crazy on us and they break the symmetry and they take out key levels, you run into trouble. Why do we run into trouble? Because everybody gets interested. You've got stop losses here. You've got traders that say, okay, maybe the top's in. So if we trade beneath last week's low, you're going to see two things happen. Number one, you're going to see a lot of retail money get stopped out. Okay, that's going to create some price action. The other thing you're going to see is you're going to see traders that believe the top of this market may be in. They're going to pile into the short as well with their stops above the high. So be smart about what we're doing here at the Euro Yen. Understand that key level, last week's low, is absolutely huge, and you want to make sure that you don't ever overlook anything like that. I've made those mistakes in the past, and the way that I don't do that now is I just mark it on my chart. Remember, if we trade beneath last week's low in this Euro Yen, you're going to see some action. I don't think I would be holding longs down there. I would wait for a deeper retracement, which we could definitely get. Okay, that's the first thing I would say. Now, if you want to break this down to maybe a daily chart, you can certainly do it. This is interesting. Now, you can see last week's low, and I just sort of ballparked it. It's not exact, but it's right on our daily moving average. Daily 13-day moving average is at 170, 155-ish, 54-ish. Dave, F19, good to see you, Dave. It's right there, right around 170, 154, 55. Be careful. Be careful there. So what could potentially happen? Well, we could wash out last week's low, and we could also get some bidders right there on that moving average. Very, very difficult area. I don't want to see anybody get chopped up there. Would I be taking a long for my moving average? In this case, no, I would not. Why? Because it's right on last week's low. I think you could definitely get a breakout underneath last week's low. So that's what I would say. Now, as far as a weekly, I gave you the big weekly level, the Fibonacci retracement. There is no Fibonacci retracement sequence to speak of here on the daily. So I would stay away from that. I would ignore my moving average for this point, excuse me, at least at this time. If I wanted to intraday trade it, the request was on the 4-hour chart. Let's see, from Dragon wants to see it on the 4-hour. I don't really see anything that's jumping off of the plate, off of the screen at me just yet. You can see right here, you sort of open down, which shouldn't really surprise anybody. Big, sort of a little bit of a gap down there on the open, but now you're sort of trading sideways. To me, guys, this is a really, really, really difficult market to trade right now. I'm curious of why you guys are looking at it. The euro yen, is it because the ECB's going to speak this week and you're thinking you're going to get a big move? It's certainly possible. This right here, though, I mean, this type of chart right here, it's a barcode essentially. And what a barcode chart is, just to sort of show you, it's just craziness. It's just crazy. There's nothing really there. And what I mean by that is there's no real move to work with. You know, my basic theory behind trading in markets is that I'm always looking for a move, and then I'm going to react to the move, sort of like a quarterback reading the defense. I want to see what defense they're in, and I'm going to go ahead and take what they give me. And what you can do in the markets is you got to wait for something to move. If it's not on the move, then you're going to project that it's on the move. If you wanted to try to do something here and play a breakout, you would try to play the breakout beneath last week's low. But you got a daily moving average there. I don't see it on the euro yen, guys. I mean, if you're trading it and you're making money, great. There's only a couple rules here. Make money is the right answer, and simple's always better. Those are my two favorites. And the third one is if I don't know, I'm not going to sit here and pretend like I know. There's a million guys out there that'll sit here and say, oh, yeah, no, this is a great idea. I don't like it. I don't like any part of it. What I would be doing is backing off to that weekly chart right here. I do like this. This gives us an opportunity potentially to trade, and I would love to get that big, deep pullback. Maybe we get it on the ECB later this week, potentially. Could happen. 168, we're up at 172. It's going to be a 400-pip move. That's a big move, but we know if we get that kind of washout, we're going to score down there. We're going to win. So I don't know, guys. There's a lot. Is that why, T. Marina? Because the ECB is going to speak? Yeah, I think I agree there. Well, those are sort of the levels. If you want to go ahead and see some bigger levels, we could go to a monthly. There just is no reason to. The weekly chart for me is everything here. And one last thing I'm going to say about the weekly, and then we're going to move on to the next market. But what you have here is just essentially, and I love these things because I'm not the best artist in the world, but this, I mean, you start talking about trend lines. Remember, trend lines don't have to be perfect. Always remember you only need about 2 points of contact. So you can start down there at that negative and just pick one of these. But you can see that the trend line is still incredibly valid. So if, in fact, you break beneath that trend line, beneath that last week's low and get that negative close, we're probably coming off. When trend lines break, you can get those reversals in a big, big way. Your RSI on the weekly is, you're overbought right there. Probably some people looking at shorts. All right, fantastic. Let me see. Small Yeezy with a gravestone doji. That's a long trend, but it will be a big pullback. I agree right there. Bang. You could definitely see the big-time sell-off coming there. All right, let's see. We had another request for the Great Britain pound, Australian dollar. So let's go ahead. I'm going to go ahead and take a look at that one. We're going to look at gold here in a minute, and we're going to look at our US 500 chart, which I don't think we're going to get a trade there. Maybe we'll look at the US 30. We can look at the US 30 as well, and that's our 5813 crossover. We're going to wait. Sort of tough trade in here early in the week. Remember, guys, there's a lot of trades out there. There's a lot of trades to be had. It's a long week. It's a long week in the markets by Friday. I mean, we're typically pretty tired by Friday, and there's no reason to jump in here if you don't see anything that you like. For me right there, that euro Japanese yen, you're welcome, Dragon, absolutely. This would be a better market for me, just what I like to do. You can see that it's very tight. Big move, very, very tight, very, very tight. You got a nice big break there, and now you're sort of clawing back in and trying to regain some of the losses that were sustained earlier this month. This is more my game. Quick Fibonacci. 38%. You've got a pretty good fight going on right now at 2.067. I don't know. I probably would just say 2067, but I understand that's confusing. So this area right here, 2.067, somewhere in there. This is an interesting area because it is 38%. In my view, the 38%, it's already been a great scalp, but if you haven't already taken that to the short, you probably don't want it. And the reason why is this isn't necessarily a trend. Look where we're trading. We're trading between my Bollinger midpoint on the weekly and my 13-week moving average. What is that? That's a non-committal technical area. It means that we're not trending. We're going sideways. So if we're going sideways, 38% isn't exactly the best bet. Now, 50% with a moving average, it's not bad. This area right in here, not a bad short right there. Could be potentially the top of this week's market. Right there, 13-period EMA is at 2.0719, and then you've also got your 50% at 2.0740. Pretty good area right in there. Pretty good area. So I would be watching that one relatively closely. 2.071, something like that. I mean, it's very, very tight right there. You could probably make a position trade wouldn't be a bad one. If in fact we do break above that zone, the back end of the golden zone more than likely is going to be productive for us. Maybe something right in there, right around 2.08. Pretty good area to sink your teeth into an attack here with the Great Britain pound Aussie. Now, as far as, what could we do on a daily or an intraday time frame? What I would be thinking, realistically, is their sort of consolidation right around a 38% on the weekly. What do I want to do on a daily? Do I want to buy down in here? Not really. It's very, very tight. You could go short and hold shorts if you wanted to. I would pass on that. I would wait for this to open up a little bit. I love this area right there. We've got a daily Bollinger midpoint up there at 2.07, somewhere up there, 2.0729. That probably would be my short. 50% plus the weekly 13-period moving average plus the daily Bollinger midpoint. You add all those technicals together, typically that makes a pretty tasty stew. I mean, when you get that many technicals converging in one area, that's probably going to be a pretty good short. Absolutely, T. Marina, you're absolutely welcome. We're going to look at a couple other markets here. I do want to cover some of the big news, though. We've got gold on deck. We're going to look at the US 30, maybe get a scalp, and I got to cover crypto some. Crypto has been just on a freight train north, and there was a few crypto bills passed late last week. I'm going to talk about those. It sort of came after our live stream on Friday, so I'm going to probably write something up and talk about those maybe tomorrow. But I got to learn a little bit more about it. But crypto. Everybody's talking crypto right now. That's for sure and certain. All right, here we go. This is sort of the big news today, and it's one of these news events that, sometimes you can see something coming and you have a guess and a gut feeling. And a lot of you are brand new to the markets, and you're from all over the world, and I understand that. I mean, we've got a truly global community here, and I know that I talk fast, and some of the concepts that I go over are pretty complex. I watched last Friday's stream last night. Every now and then I'll watch a stream and say, man, Shane, you're moving really fast and not really articulating your ideas as well as I should. And so if you do get confused on these live streams, you just got to bear with me. And if you have questions, be sure to ask. Now, sometimes we get off in the tall grass and we start ranting about politics and things, and that's not my intention here. But we did talk about all the different ways that they can put pressure on Jerome Powell. And the truth of the matter is, Trump can't really fire him. I mean, you have to go to Congress, and essentially that's going to impact the Fed's charter. So then you start talking about pulling the charter from the Federal Reserve, and that's something that was campaigned upon, but we don't really think anybody's ever going to do that. The Trump administration might. I mean, they've done things that we didn't think we'd ever see. But there's a lot of ways to put pressure on people to do what you want them to do. And we're not giving a crash course in loan sharking or racketeering or anything like that. But there's ways to put pressure on people. And we see it a lot in the legal system, and plea deals and things where prosecutors put pressure on folks to sign deals and things, and they decide to take the deal. Well, Jay Powell may be taking the deal. This is a sticky situation. Now, was there really any laws broken? Probably a dozen of them. But they're laws that are always broken. So when we talk about a government project running over by $700 million, it shouldn't surprise anybody. I mean, the train, the high-speed rail in California is like $10 billion in 10 years over. So we understand that government projects typically run into issues. This one's a bad one, though, and the timing is really terrible for Jay Powell because he's under a tremendous amount of pressure to cut interest rates. And right here, Treasury Secretary Bessent calls for a review of the entire Federal Reserve. That's the Treasury Secretary wanting to audit the Fed. This is fascinating. This is something we've heard about over and over and over again. Bessent backed the idea that the Fed should probably be easing with inflation mostly moderating. They want rate cuts. The Trump White House wants rate cuts. The administration wants rate cuts. And they're going to use every piece of pressure, every bit of leverage they can to get them. And this right here, we're talking about auditing the Fed. What we need to do is examine the entire Federal Reserve institution and whether they have been successful. You're talking about dechartering the Fed. It's something that's been floated out there for years in conspiracy circles. This is interesting. This is the acting Treasury Secretary saying this. And then look what we have right here. This broke about an hour ago. Fed Chair Jerome Powell hit with criminal referral. Fed Chair Jerome Powell hit with criminal referral by House GOP Trump ally. Trump allies have been going after the Federal Reserve Chair because he won't cut interest rates. The criminal referral is over the $700 million overrun in that building, the Fed's new headquarters, or the renovation, the $2.5 billion renovation to the Fed headquarters that we're not even sure they need. So this is a problem for Jerome Powell. And remember, when it gets really deep, you've got a couple of options. Number one, you can start cutting interest rates. and try to sort of ride your term out and just get out of Dodge, make everybody happy, try to turn the heat down, turn the temperature down, as they say, or you can resign. Criminal referrals could make people resign. No question about it. Remember, these folks are wealthy. I mean, Jay Powell's worth $17 million we know about, probably twice that. That's an old number. But something like that, not to mention a potential career in the private sector after he's done as a Fed chair, I mean, got a lot to lose. And the Trump administration knows that, and they think that they have him perjuring himself in front of the House Ways and Means Committee. I don't think he'll ever make that stick, but the pressure itself may start influencing our interest rate expectations, which in turn are going to influence the dollar. And we've sort of seen that today. 95% now say that you're going to get we're going to hold serve there in July. You're not going to get your rate cut in July, but still that was 99. But this is the one we all want to know about. This is the one everybody wants to know about, September. What happens in September? We're still right around 60-40. Still right around 60-40. But what about the dollar? What do we think? Dollar's getting hit today. And they're getting hit because of these news stories that are coming out against Jay Powell. They know that the next Fed chair is going to cut some more. That's a big deal. So when we're thinking interest rate expectations, we're thinking about trading the dollar. And I know this is sort of advanced thinking, but we've got to think like this. If you're going to trade, you got to say, okay, what could possibly happen here? One way or another, you're going to get rate cuts. And I personally don't know if you should get rate cuts in September. I really don't. I mean, the inflation's entrenched. It's high. It's going to take something dramatic to get us out of this pattern. And, November, what are we thinking in November? Probably down a half point by November. And how about at the end of the year in December? We're basically pricing in that perfect, was that a Gaussian curve, a bell curve? Something like this. You're looking at, what, a 70% chance? Or it's a 95% chance you're going to get one rate cut, but you're looking at about a 70 for at least two. Interesting stuff, guys. So what happens when interest rates get cut? What happens when the dollar loses value? Well, I mean, a few things happen. One of the big things that happens is that you see commodities rise. Commodities rally right here. This is gold. Fantastic example of what has happened today. Dollar goes down, gold goes up. Shouldn't surprise anybody right here. So if you are trading gold today intraday, you already sort of missed the big move. This started during the U.S. pre-market about 8 a.m. Eastern. Nice big run. Then these Jay Powell stories started hitting right around that cash open, and now what's happened? Sort of topped out. Now we're coming back down into what I would call our U.S. session range. So if I was trading this and I was looking at the gold chart, I love the 4 hours on the gold chart. I think it's a fantastic time frame to trade. I think you have an opportunity potentially to buy along with this news cycle. And all of a sudden rate cuts, our expectations are starting to, hey, listen, I said it last week over and over again. I was like, hey, they're not going to cut interest rates in September. And I think with this much heat, with this much pressure, I think they're going to cut him. I think that he's going to cut him. I don't think he's cutting in July, but I think he's cutting in September. Or Jay Powell's going to resign. And if he resigns, then you're going to see your interest rates come down maybe a point by the end of the year, because that will be a big shot across the bow to the next guy guy or gal that's in that seat. Going to be tough. Going to be interesting. Right there, 33.79.93 could be a great pullback buy here in gold, 4-hour chart. Love the 4-hour time frame for gold. I think it's fantastic. Really gives us an opportunity to sink our teeth into that 24-hour cycle. Remember, gold's traded throughout the day. I mean, it really does. It's going to dry up a little bit here towards the end of the U.S. session before the Tokyo session. But once we see the Tokyo session, we see a little bit of action. And then the London session comes on, a lot of action in the London session. And then the U.S. session typically starts about at 90 minutes before that cash open. And then you start to see a little bit of volume really return to the gold markets. Pretty good stuff here, though. I mean, I do like the pullback. I think we've got a great opportunity to trade that intraday. As far as, a macro level, I mean, I could pull these macro charts, but nothing's changed. Really, nothing's changed. This has been the bullish flag that we called, seemingly forever ago. And it really is. I mean, it is a bullish flag. If you're a pattern trader, it doesn't really get any easier than this. I mean, this is a pattern. There's your flag. Here's your trend line. Here's your flagpole. Something like this. Not the best. I'm not the best artist in the world. Nice big bullish move and flat sideways trade. That's what it's always about. That's what a bullish pennant is always about. A bullish flag's always about. Bullish run, sideways trade. The sideways trade is being created. Buyers and sellers, of course. Price discovery. They're trying to figure out what exactly it's worth. They've nailed this market down to a relatively tight range for the last 90 days, especially compared to what we saw last spring. What's the catalyst for participation? key number-wise, it's 3,500. Believe me, there's a tremendous number of people that are short this market with a stop above 3,500. I would be shocked if we don't run 3,500 at least to stop everybody out before you get a bigger reversal or maybe the next leg up. In my view, if you do break 3,500, you're going to 3,750. Probably happens fast. So as far as my key levels, what I would be looking at, I'm big on quarters, big on quarter handles. 3,750 would be probably my next port of call. I think that would be your next topside target. That probably is a lot of topside targets. And then 4,000. Do we get to 4,000 by the end of the year? I think anything's possible. I think given the proper news cycle or the right news cycle, if we see a Fed chair get forced out and then the next person come in and say, yeah, I'll cut rates, where do you guys want them? Then you're going to see a massive uptick in inflation. It's a bad idea. It really is for the consumer. It's a bad idea, but it will send gold higher. It will send gold higher. There's no two ways about it. And it's just important for us to understand really the roadmap to the top side is there are no technical levels really to be scared of. There's only key levels, and key levels typically dictate price action, especially in a trending market. Gold, bullish bias completely. I would much rather be holding longs than shorts. If you were holding shorts and you're stopping yourself out above 3,500, it's not a bad idea. It really isn't, but you haven't got, the big reversal that you were looking for, and you've probably been in that trade a month. It's probably going to wind up being a duck. Probably not going to work. But to the top side, I'm still eagerly awaiting for the big breakout. I think it's coming. It just depends on what will be the catalyst for it. Excuse me, a little bit hoarse today. What's going to be the catalyst for it? It's going to be rate cuts. It's going to be a surprise, and forcing out a Fed chair is a big surprise. That's for sure. Gold, yeah, T Marina, gold. As far as daily charts and weekly charts, I mean, we can break it down, and I can give you levels all day long. But I really think that you'd be playing the 4-hour pullback. That's a pretty good level we just showed you. But look at this weekly chart. I mean, there's your big move. There's your run up. And then you just sort of, the ranges are big. The ranges got really big back in May, the weekly ranges. And now we're just sort of drying up and moving sideways. Is the breakout on yet? I don't really think it's on. If you were going to make a weekly bullish pennant, you would do something like this, more than likely. So is the breakout on? No, not yet. 3,500 is the catalyst in that market. Be very careful. If we do break above that level, I don't think you want to get caught holding shorts if we break above 3,500. Definitely. We'll be covering gold all week, but for right now, nothing's really going on there. US 35-minute chart, I was really hoping to execute one of these 5-8-13 EMA crossover strategies. These are very popular. I get a lot of questions on the 5-8-13. We get a lot of viewers for the 5-8-13 webinars, so it's one of my favorites. I love the 922. Right now, I was really hoping to execute a live trade for you guys here, but I don't believe we got one on the board. This would be our US 500. Let's go to a US 100 5-minute chart. You just don't really have it. Great Britain pound USD, maybe 5-minute chart. Potentially, we could be looking at a late day, maybe position trade. Would I want to use a 5-minute chart for that? I wouldn't. But you could. You certainly could. Take a look at what you had earlier today, though, right there, deep into overbought territory on your RSI. Remember, RSI is above 70. That's our first initial. That's sort of the precursor for a trade. That tells us, okay, let's take the safety off and let's get ready to shoot. And right there, we're above 70. We're looking to sell. Nice big rally there, and then we come off. And what are we waiting for? We're waiting for the crossover. We're waiting for the 5 to cross over the 8 and to get that bearish close. And I believe it probably would have been right there. We didn't see it in real time. It's hard to really tell when that crossover set up perfectly. Typically, it's one bar later. So maybe right there. Maybe right there would have been your entry. Potentially right there. More than likely right there. Still pretty good. You're still in the money. So I would be watching that one closely. You're almost in oversold territory. Potentially, you could take that bid towards the end of the session and try to get something going there. All right, guys, let's go ahead and take a look at our MT5 platform here. I got the 5-8-13 on there as well. This is your MT5 platform on your switch markets. Remember, if you don't have a broker, check out switchmarkets.com. It's one of those places that pretty much caters to traders. I mean, it's where traders go to trade, and it's where people chase their financial goals. Lots of bonuses right now, especially if you're an international client. Lots of bonuses. Be ready for our newsletter to drop tomorrow. We're also going to do another webinar, a live webinar over at Switch Markets. You're going to want to check that out as well. And we're doing that one, I believe it's Wednesday. I'll have to double check, but I believe it's Wednesday. So what I want to cover right now is WTI crude oil. Now, crude oil is sort of in an interesting spot. We're, well, I mean, there's a million different ways to say it. I'll just come out with it. We're in no man's land. I mean, we're in no man's land with WTI crude right now. We're in July. We're trading Augie, getting ready to, or excuse me, we already transitioned into the September futures contract, which is fall seasonality. We should start to see a pullback in prices going into the fall because we're anticipating less demand in the winter months. That's relatively easy. You know, crude oil is refined to make gasoline. When everybody's using gasoline, typically the demand for crude goes up, and that sort of stabilizes prices. We've got two bullish market drivers, though, we've got to be aware of. Number one is geopolitical uncertainty. Even though it's not really in the news much anymore, Russia-Ukraine is still going. And also Israel-Iran, there's a lot of saber rattling every day, but we haven't seen the kinetic exchanges, or at least the publicized kinetic exchanges that we saw about a month ago. So the geopolitical stuff sort of died down, but it's still a bullish market driver. And as far as crude oil goes, you know, interest rate cuts are going to send crude oil prices higher. There's no two ways about that. So when we start thinking about, okay, how am I going to trade crude for the rest of this year? I always say July, August, early July and August, sort of no man's land, because when we price crude oil, we price it forward thinking. We're thinking about what season we're going into and what demand's going to be, not what it is right now today. So we're sort of worked our way through the peak pricing of energy, of refined fuels, and of WTI. So does that mean I'm bullish or bearish? It's really hard. It's really hard right now because of those market drivers. And believe me, if you get the rate cuts, you're going to see crude oil sort of stabilize. Now, I was one of those people that really did believe the Trump administration was going to do the drill, baby, drill, and the production was going to go way up and all that stuff. We haven't seen it in the supply numbers. We haven't seen it in the weekly supply numbers. They aren't that great. They really aren't. So as we roll into the fall months, have we really built up a stockpile of crude oil? No, we haven't. We're about 8% below the 5-year average for the U.S. supply. So that's very, very low. Imports are up. U.S. imports are up. So you're taking more oil off the global markets. You have a potential hot trade war brewing between the United States and Canada. Hasn't really evolved yet. We've got some tariff deadlines coming up here in another month or so. So there's a lot that goes into WTI crude. Right now, I don't particularly like trading it. It's flat. It's ugly. I like it when it's moving. And when it's moving, we can make a lot of money. But when it's not moving, we can get hurt really bad. And what we've seen since these big breaks of late June has just been just an ugly scenario. I mean, this really is. I talked about a barcode earlier. This is a barcode. Just ugly. The market has no direction at all. But this Fibonacci is a pretty good one. This right from that high, these 2 days right here, we're still trading inside of those ranges all these weeks later. Now, if you want to trade WTI crude oil over at Switch Markets, you're going to be looking at the spot WTI. This is spot WTI crude oil. It's different from the futures contracts or the CFDs. We'll look at the U.S. oil CFD in a minute. But this 38% level right up there, right up around 70, that's a fantastic top of this market. Right now we're trading about 67.50, 67.58. That's going to give you an opportunity potentially to take a short. Could we get that this week? Absolutely. So if we get 70, we're sellers. We're sellers up there at 70. Now, are we buyers? Where are we buying from? You probably could buy from somewhere down around this low, which is right just north of 65. And remember, that's on the spot crude oil contract with WTI. Now, let's go ahead and take a look at the U.S. oil. You're going to get different numbers. There's no question about it. Let's go back to my Fibonacci stuff. Let's go to U.S. oil CFD. And what you have here is basically the same chart, but they're going to be different numbers. I'm just working still on that 2-day range, guys. Back in late June, right there. 23rd of June, 24th of June. Those are a couple big days, weren't they? Look at that. Beautiful. 68.99 has been absolutely fantastic. You see right here, could not sustain trade up around there. What is the high back on the 14th of July? It was 69.61. Sellers stepped in and protected 70 with a vengeance. Bobby Bob, good to see you, Bobby. Welcome. And you can see the big reversal there. But look at these daily. These are just dojis, guys. Doji. What is that? They would call that a long-legged doji. I would call that a hammer. So what do you have right there? Boom, doji, open gap down, tight ranges, low participation. I don't like it. I don't like any of this at all. I would be waiting for something to happen in WTI. I would not be in a hurry to step up and buy it or sell it. If I had to pick a direction, Shane, are you bullish or bearish crude oil? We're getting ready to wrap up July. In August, I typically start looking towards the bearish side of the ledger. Now, my projections back in the spring, I don't like missing on crude oil, especially when I say, okay, it's going to trade within X amount of range or do something. But, my call on crude, I was really looking for a big-time sell-off. And I think it's still in the cards, but I don't necessarily know when it's coming. Right here, remember, we talked about the real low of WTI was not zero. It was right around negative $40 a barrel after COVID, in the April after COVID. And then we run right up here to these highs back in March of 2022, which are Russia-Ukraine highs. And now what do you have? You've got sort of an incredible 38% right around 64.50. And where are we trading? Right around that area. I thought right in here. I sort of figured, I said, once we broke beneath that area, I was looking for the washout, the big washout, probably down to 50 even. And that low right there only went to about 55. So we caught some bidders down at 55, and we saw a pretty good rally. What's the biggest level in crude oil right now? It's got to be 64.50. Got to be 64.50 on this U.S. oil contract. So if you're trading oil, be smart, be careful. This is a tough dynamic environment. I feel like we're waiting for a break. I really do. I mean, look at these daily ranges. I mean, this is terrible. Look at all these dojis and hanging. It's a nightmare. Good luck trading that. So if you're trading U.S. oil, might be better to be patient, but I think you could probably step up and bid just north of 64.50s and be just fine. That's for sure. Catmandu 999. Good to see you. All right, everybody. I think I'm going to go ahead and sign off. Mondays, folks are just now getting back in the office and getting it going for the week. So I understand sometimes we start a little bit slow, but believe me, we'll be hitting on all cylinders tomorrow, Wednesday, and Thursday. We got an interesting week planned, that's for sure. We're going to dig more into the Federal Reserve scandal watch. Powell speaks tomorrow. That's the number one story in finance right now, and that's the big market mover. And then Wednesday, we're looking at the Switch Markets webinar, the 920 EMA crossover. We had great stuff on the 920. I've really been monitoring this Shiba Inu trade. I don't like beating a dead horse. Typically, once we call it out and it goes, I just leave it alone because, you guys know. But this is an interesting trade. Boy, the bid was down there at 12.35, and now you're up above 15. That's fantastic. Bitcoin, more action out of Bitcoin. People are really loving Bitcoin. Anytime you're working out in the gym and somebody comes up and taps you on your shoulder and starts talking Bitcoin, I go, man, this crypto stuff's taking the world over, isn't it? I didn't see this coming 5 years ago. I really didn't. But crypto looks like it's the future. And as far as Bitcoin goes right now, I mean, 117, 210. I mean, that is the level, no question. You're trading right now at 117.653. If in fact you do break this, you break this 38% and sort of sell off. Be ready. Be ready for 113 buys. You want to make your mistakes to the long side of the crypto market. If you're gonna lose money trading Bitcoin, I don't think you want to try to go short. I really don't. Try to play a breakout short. I think it's a mistake. I think you want to be long. Let's run with that trend. The pressure there is so bullish, and the news is positive every single day. It would be really difficult for me to step up to the plate and say, okay, I'm done trading, or I'm done with the long side of Bitcoin, because we're not. We sort of topped out right up at 123. We've had a market call at 125 on the board for seemingly ever. I would be surprised if we don't go up and check it, but we may not for a while. But right now, bids 113.5. Pretty good zone there for Bitcoin. I think it could be maybe one of our picks of the week. I'm going to go ahead and figure out which one of these markets is ripe for the taking, and we're going to put that out in our Switch Markets newsletter, the pick of the week. Can't wait to hear Powell. Yeah, me neither. I want to hear what he says. Eli, patience pays. Absolutely, Eli. You're welcome, Lewis. Absolutely. All right, guys, that's pretty much a wrap for me today. We got good stuff coming your way, though, all week. The webinar, the 920 webinar, probably going to play that in the How to Trade trading room this week. Last week, we did it exclusively for Switch customers, and we got really a nice turnout. But I'm going to go ahead and play it for our traders at the How to Trade community as well. You guys have been with me for a long time, and if you're interested in the 920 EMA crossover, trading it live, go ahead and pop in. We'll see what we can do. And then Thursday, we've got trading the Euro ECB fallout. That should be a pretty good one. We're going to have a lot of Euro stuff going. May even take a look at maybe a few European indices. I'm not real big on those, but we could definitely look at maybe the CAC 40 and maybe the German 30, something like that. Trading psychology workshop is going to be Friday. Really a slow Friday, slow news week. It's not a big news week. We're looking at the ECB, and that's about it. I believe the RBA gets involved, or somebody gets involved tonight, but it really shouldn't be that huge of a market mover. All eyes are on the ECB, guys. Oh, yeah, and Jerome Powell. Unbelievable. I never thought I'd see the day when, a Fed chair is – hey, listen, I don't have a dog in the fight. I'm not sticking up for anybody. If they went $700 million over budget and Jay Powell was running that and signing the checks – believe me, I was a construction manager. I used to sign the draws. We used to go to the bank and get the draws, and I would pay the subs. And I can tell you right now that the accounting was a little stricter than what it is over there at the university over at the Federal Reserve. No question about it. If you're running a construction project, some of you have been in the industry, I will tell you that the bank wants a Mr. Explanation, especially. I mean, you could run $400 or $500 over on like ordering a couple pallets of shingles, and the bank's going to want to know why you're long on that. Where'd the money go? I'd say, well, it was an overage. We just got a different kind of shingle. Clearly, over at the Federal Reserve, they're getting the nice shingles. They're gonna put a great roof on that place. It better not leak. And watch, they'll probably get it all done, and there'll be plumbing problems or something crazy. I don't know how you spend $2.5 billion and then go $700 million over. I mean that. Oh man, I have questions. That's for sure. All right, guys, I'm going to go ahead and sign off for right now. Interesting Monday, good Monday to game plan. Keep your head. Don't if you're trading right now and you're going into that power hour later today with U.S. stocks, keep your head. Don't get too carried away. Right now, I'm not seeing anything that tells me it's a trend day. We're up. We're modestly up, about 230 points on the Dow, about 37 on the S&P 500, about 193 on the Nasdaq. Patience is the better part of valor. You can make more money tomorrow than trying to force something late today. All right, guys, I'm gonna go ahead and get out of here. Team Marina, great project management. I can't believe it. I absolutely can't believe how they lost $700 million. Listen, the defense budgeting, defense departments, all sorts of public service stuff, healthcare, those folks all lose money all the time. But you're the United States Federal Reserve. You're supposed to be the people that do money better than everybody else. And you go, we're running 700 million long. What a joke. You guys are all fired. Come on, bring it. We need a new FOMC. Let's get some new men and women in there and see if we can get this thing on the right track. 700 million. Start typing your resignation papers. All right, everybody, I'm going to go ahead and sign off here for a few hours. We'll be back tomorrow at the same time. We're going to go at the same time every day this week. There's no key economic events, but the following week, we're going to have FOMC Live, and then we're going to roll right into NFP that's going to come on in early August. Looking forward to it. Going to be some great trading. Confusing right now, though, and one of my biggest rules is when I don't know, I stay out. I'm out right now. We're going to wait for this. We're going to wait for things to clear up a little bit, and then we're going to figure out how to trade this thing in the best way that we can. That's for sure. Okay, guys, I'm out. Have a fantastic trading day, trading session. As always, trade the action well, and we'll talk soon. See you.